When it comes to picking a currency pair to trade as a beginner trader or a seasoned trader looking to transition from one pair to another, there are a couple of things that you have to consider. A lot of us have made the mistake at some point in time of trading a particular pair because we've heard about other traders trading it, or we've heard that it is the most popular pair to trade, so we just start trading it and not considering certain factors. Now, in this video, I'm going to be sharing some of the factors that you need to consider when it comes to picking a pair for you. Now, the very first thing to consider is the session times, the time of day that you're coming into the market. But in order for you to do that effectively, you have to understand when the market is moving, and that means you have to understand the session times, right? We have three major sessions. We have the London session, we have the New York session, and we have the Tokyo session, which is also known as the Asian session. The London session starts at about 2 a.m. Eastern time to about 11 a.m. Eastern. The New York session, 8 a.m. Eastern to about 5 p.m. Eastern, and the Asian session, Tokyo session, starts at about 7 p.m. to about 4 a.m. Eastern. And what you're going to notice here, ladies and gentlemen, is that a lot of these sessions will overlap with one another. The Asian session overlaps with the London session, and the London session, which is a big session, overlap with the New York session as well. And these are the two biggest sessions. The New York session is probably the biggest, not probably, the biggest session because it is overlapping with the London session. So you're likely going to see a lot of movement during that time. And of course, the dollar is pretty much the global currency as of right now. So it also is a pretty big pair, and it's a big session to trade at that time. So you're likely going to see a lot more transactions. You're likely going to see a lot more liquidity. Now, the other thing that is also a lot more personal when it comes to the session time and the pair that you trade is you as a trader, because trading allows you to control your own time, and it doesn't make sense to try to trade a session that doesn't give you the flexibility and freedom. So when you're picking a pair, you have to pick a pair that fits your time zone. So I live in the Eastern time zone, which means that I am trading pairs that move during the New York session. So I'm not trying to trade a London-based pair and wake up at 3 or 2 a.m. That's ridiculous. It's not gonna work for me. And during the Asian time, I'm spending time with friends, I'm going out for dinner. I don't have time to be sitting here and looking at the market. But if I worked a 9-to-5 job and I didn't have exactly the time to trade the New York session, I might consider trading the Asian session. So you have the ability to kind of see what works best for you. So the next thing to consider when picking a currency pair is you will have major and minor pairs. Now, major pairs are pairs that are in line, or have the US dollar, with it. So if you're taking a look at like this is gold and the US dollar, euro, the US dollar. These are major pairs because, like I said before, the dollar is the global currency. So it means that there is a lot of transactions, there is a lot of liquidity flowing into those pairs. Pound yen also moves pretty well, but it is not technically considered a major pair. It would be a minor pair. So any pair that is paired with the dollar is considered a major pair. So generally, the standard is you want to trade major pairs because they will likely move more frequently. They will likely move better. There will likely be, less choppier markets and just better spreads. Then you have pairs like minor pairs, and these are pairs like Aussie, New Zealand, pairs that are not exactly paired with the dollar. So they may still be good pairs to trade, but you will likely not see the same level of liquidity. You will not see the same volume. As well, you have pound NZD. So these are all things that you have to consider when picking the right pair. So the third thing to consider when choosing a pair to trade is your particular trading style. We have day trader, we have position trader, which we're not going to talk about. You have a swing trader, and you have a scalper. So a day trader is someone who is going in and out of trades, right? You're looking to close your entire, trades by the end of the day. As a swing trader, you might have your trades open for 2 to 3 days, just at least more than 24 hours. But then as a scalper, you're going for small movements, right? So generally, day traders tend to also scalp the market as well. I know I scalp the market, but I also swing trade as well. But before I understood the importance of a currency pair. I was a swing trader because I was trading pairs. Let's say a pair like Euro USD. I would trade the pair, because I was aiming for a higher objective. Maybe I'm looking to make 100 pep. Fortunately, with a pair like this, it would take you maybe a day, maybe 2 days, maybe sometimes a week for you to get 100 pep worth of movement. So automatically, I became a swing trader because I needed to sit in longer before the market would give me what I needed. So for the first 5 years of my trading, I was a swing trader. But then when I started to look at various different markets like gold, for example, let's take a look at this move. This is the 5-minute time frame from here all the way up here. This is about 230 pep worth of move that happened in 50 minutes, right? So if I took this trade with a good risk, with 30 pep right here, I could have probably placed my stop loss at this low. Let's just say we did it with 30 pep. That could have been a great risk to reward ratio, and I would have been out of the trade, within an hour, right? So you have different pairs that are going to move a little bit more. And based on your trading style, you have to determine what is best for you. You might not like a market that moves very quickly because maybe you're going for like 5 or 10 or 20 pep, and you need to be able to minimize your risk. In order to do that, you may not want a pair that is too volatile. But if you were like me, I was a swing trader because I didn't know that there were better pairs that could give me my own profit objective at a much better rate, at a much faster rate, without me having to sit in the market, for 3 days before I got to make that $1,000, then, you might want to start to look at the volume that's coming into that particular market and how that fits with your trading style. So the question to ask yourself is, are you trading a particular way because of the currency pair, or because you actually want to trade that way? And for me, what I came to realize is I was a swing trader because I was trading pairs that were slow. So that's something to keep in mind. The last thing when it comes to picking the right currency pair to trade is technical factors. Now, ladies and gentlemen, you have to work with your strengths. I am a firm believer that when you come into the market, there are certain things that you're going to be good at, and there are certain things that you're simply just not going to understand. As a new trader coming into the market, even as a seasoned trader, you will understand and be good at certain things. I'm very great at market structure. I'm pretty much, good at most of the technical factors because I spent many years honing my skills, but I have mastered market structure. And market structure is, the understanding of how the market is going to move from a buyer and seller concept. So if price is moving, making high highs and high lows, high highs and high lows, that is the basic market structure, right? When sellers come to the market is making lower lows and lower highs. So there are currency pairs that are going to respect this sort of flow a lot better. Now, if you take a look at gold, for instance, right, you can kind of see that from a market structure standpoint, it's pretty good, right? You can easily identify, okay, boom, you have this market structure right there, okay, price continued, its movement, made a high, and then came back down here, boom. So it's flowing. When it comes to market structure, it's really doing its thing. Here, it took out this low, made a high, and then took out the low, but it continued moving higher because we were in the buyer's market. But for the most part, it continued making high highs and high low, right? High highs and high lows. So some markets, right, if you take a look at other markets, they may not respect market structure the same way. They may just come back. If you take a look at a pair like Euro USD, over the years of trading Euro USD, it's not been my favorite because of that particular reason. The market structure doesn't always make sense. It doesn't always respect, the pullbacks is a lot, right? And you can see things happen where prices, still in the buyer's market, come back, take out this low, and then, you're anticipating the continuation to the downside, and then it takes out the high, and then it comes right back down. And so from a market structure standpoint, it is not as smooth as it is trading gold. Some might disagree, but just from my research and from my own personal understanding, it doesn't fit my technical strong suit. And that's an important thing to consider when picking a pair. You have to actually go on and back test that pair based on what you understand understand till date, right? And market structure is an easy thing. If you're a beginner trader, you likely understand the market structure. If you don't, I would recommend that you study that. But if you're a seasoned trader just looking to transition, it's important to take a look at the pair and say, okay, well, how does this pair move? Is this something that makes sense to me? Is this something that I can easily play with, that I can easily understand, and so on and so forth? But if you understand the technical aspects and it fits what you are currently doing, and you're not going to have to learn a new approach to really refine in the market, because like I said in the beginning, each market will have its own different personality. So that's really important to consider. But ladies and gentlemen, the first thing is, when it comes to picking a pair, you have to understand the time zones, because the time zones will bring in, the right volume and liquidity for that market, and as well as you picking the time that works best for you as a trader. The goal is freedom. We don't want to be, looking at the market 24/7, even though the market is open 5 days a week, 24 hours a day, right? You need to still have a pocket, a window that you can come in, focus, and not be, distracted. And you got to use the session time to decide what works best for you. The next thing is understanding that there are major and minor pairs, and also having, knowing what type of trader you are, whether you're a swing trader, and picking a pair that is going to fit that objective. If you are a swing trader, right, are you a swing trader because you're trading, slower pairs because you have higher objectives? Or are you a swing trader because you just don't have the time to day trade, or you just want to, from an emotional standpoint, you can't handle a pair that moves that quickly? So these are all things that you have to consider when picking the right pair. And the final thing is the technical strength, right? What are your technical strengths, and does the pair, line up with that? Ladies and gentlemen, if you can follow these, pretty much these 4 things, and you can at least consider them before you pick the pair, try to, take some time to back test, whether you do that on the weekend or you take a week, maybe you even demo trade the pair for a couple of days, maybe a month or 2, right? However long you do that, but the goal is mastery. The goal is to get comfortable with the pair. The goal is to just really understand the market that you're into, because the more understanding you have, the more in sync you can be with the market, and the better your decisions will be. Ladies and gentlemen, thank you guys for watching, and I hope you're out there living free. Till next time, peace.